Dear learners, I welcome you all in the session on Consignment Accounts Part 6. So far, we have discussed about the valuation of the closing stock and the treatment of normal and abnormal loss in the consignment accounts and the impact of normal and abnormal loss on the valuation of closing stock. So, today in continuation with that, we will discuss how the treatment is made in the books of the consignor when the goods is dispatched by the consignor to the consignee on invoice price. Dear learners, we had also discussed about the cost price, about the invoice price, and when the goods is sent on at invoice price, then how accounting treatment will take place in the books of the consignor. So, that we are going to discuss today in the present session. Accounting for goods sent at invoice price. So, dear learners, we have learned about the concept of invoice price, the calculation of loading involved, and the adjustment entries to be passed in respect of all the 4 items, that is opening stock, goods sent on consignment, goods returned by the consignee, and then the closing stock. As for the recording of transaction for goods consigned at invoice price, treatment in books of consignee is not affected at all. Even in the books of the consignor, all entries will remain the same, but amounts with which 4 items involving loading, that is opening stock, goods sent on consignment, goods returned by the consignee, and the closing stock will reflect the invoice price. So, we can easily understand this concept of invoice price and the valuation of unsold stock and the treatment of normal and abnormal loss and the impact of normal and abnormal loss on the valuation of unsold stock with the help of an illustration. So, the illustration is with us. Raj Traders of Ludhiana consigned 100 computers costing rupees 20,000 each to Bahadur of Guwahati at 10% above cost. Raj Traders incurred rupees 500 for packing and other charges on each computer. The consignee received the consignment by paying rupees 1500 for the railway charges, 1300 for the insurance, and rupees 200 for carriage. He submitted the account sale as follow: 20 computers sold at rupees 25,000 each for cash, 50 computers sold on credit at rupees 30,000 each, and 10 computers taken for his own stock at rupees 25,000 each. Consignee remitted the balance after deducting his commission at the rate of 10% on sales. Assuming that original entries are made at invoice price and consignment stock is valued at invoice price, write necessary accounts in the books of Raj Traders. So, here Raj Trader is the consignor and Bahadur of Guwahati is the consignee. So, let us see how the treatment is made in the books of the accounts. So, here books of Raj Traders, it means in the books of the consignor. So, consignor will prepare the first consignment account. So, this is the debit side, this is the credit side. Let us see the debit side first. 2 goods sent on consignment So here you see 100 computers were sent at the cost of rupees 20,000 each. So it means 20,000 multiply by 100, it means 20 lakhs. 20 lakhs at 10% above cost. So 20 lakh is the cost and 10% of 20 lakh is 2 lakh. It means these computers were sent by the consignor to the consignee for rupees 22 lakh, and out of 22 lakhs 20 lakh is the cost and 2 lakh is the loading, 22 lakhs, and here loading by goods sent on consignment 2 lakh is the loading. As I had already told to my learners that the loading amount of any item which is to be recorded here in the debit side, so the loading amount will be shown in the opposite side of that particular account. So here 22 lakh goods sent on consignment, so out of 22 lakh 2 lakh is the loading amount. So loading amount will be written here in the credit side. Then to bank account consignor expenses. So these are the expenses which have been incurred by the consignor, that is 50,000. So let us check it. Raj Traders incurred 500 for packing and other charges on each computer. So if we multiply 500 by 100, because 100 computers were sent, then it comes to 50,000. To bank charges 50,000. To Bahadur consignees expenses 3,000. Let us check it. These are the expenses which have been paid by the consignee, which have been incurred by the consignee. Let us check it. The consignee received the consignment by paying 1,500 for railway, 1,300 for insurance and 200 for carriage, 3,000 total. Then to Bahadur commission 2,25,000. So I think the rate of commission is 10%. Yes. Consignee remitted the balance after deducting his commission at 10% on sales. So it is very simple. The sales is 22,50,000. So 10% of this 2,25,000. And now let us see the amount of sales, how we arrived at 22,50,000. It is very simple. So 20 computers were sold at 25,000 each. So it means 25,000 into 25 lakh, and 50 computers were sold at the rate of 30,000. It means 15 lakh. So 15 lakh plus 5 lakh, 20 lakh, and 10 computers at the rate of 25,000, that is 2,50,000. So total is 22,50,000. 22,50,000. So 10% of this is 2,25,000 commission. Now, yes, now we will see these three items, that is stock reserves. It means this is the amount of loading of closing stock. This is the amount of closing stock, and this is the amount of loading which is included in this, and this we have already calculated. This is the net profit transferred to the profit and loss account. So total is 29,600, 29,600. So let us see how did we arrive at the amount valuation of closing stock 4,50,600. So here you can see calculation of invoice price per computer. Cost price of each computer 20,000 given, invoice price 10% above cost. So 10% of 20,000, 2,000. So it is total 20,000. 20,000 plus 2, 22,000. Calculation of closing stock. It is very simple. Total invoice price of 20 computers at the rate of 22,000 per computer. So 22,000 multiplied by 24 lakh, 40,000. Add proportionate non-recurring expenses incurred by the consignor 50,000 and incurred by the consignee 3,000. So here we can check how much amount has been incurred by the consignee. Yes, consignee 1,500, 1,300 for insurance and 200 for carriage, total 3,000, total 53,000. So this proportionate expenses is 53,000 is representing of 100 computers, because 100 computers were sold, 100 computers were sold, and out of 100, 80 computers have been sold off. So 20 computers is the unsold stock. So if this 53,000 is meant for 100 computers, then what it would meant for 20 computers? It means 10,600. So total it is 4,50,600. This is the valuation of the closing stock, 4,50,600. So total is 29,600. Goods sent on consignment. So very simple. By goods sent on consignment 22 lakh. So loading amount is 2 lakh and the cost of goods will be transferred to the trading account 20 lakh. So 22. Now this is the consignee account. So consignee has made the sales of 22,50,000. The entry was consignee account debit to consignment, that is sales proceed 22,50,000. Here the consignment expenses incurred by the consignee 3,000. This is the amount of commission of consignee 2,25,000, which we have already calculated. This is the balancing figure 20,22,000. So total is 22,50,000. Stock reserve account, very simple. So the loading in the closing stock is 40,000. This is the amount of loading, 40,000. This we will calculate. This 40,000 is included in this closing stock. Yes, calculation of loading. So invoice price per computer, yes, it is 22,000. Cost price per computer 20,000. So loading is 2,000 rupees per computer. And total loading on goods sent on consignment is 2 lakh. So loading is 2,000 rupees per computer. So on closing stock is of 20 computers. So if rupees 2,000 is loading on one computer, then what will be on 20 computers? So 2,000 into 20, this is 40,000. So here instead of 200 it must be 2,000. So this is a printing mistake. Now the next question is, Ramdas of Hyderabad consigned goods costing rupees 72,000 to Prakash of Cochin at a pro forma invoice price, which is cost plus a profit of 1/6 on invoice price. The consignor paid rupees 1,800 as insurance and other charges. Prakash received the goods and paid rupees 3,000 for freight and other charges. He was allowed 3% commission on gross sales. 3/4 of the goods were sold at 33.33% profit on cost, half of which were credit sale. Half of the balance was stolen. It means whatever amount of units were unsold, so half of that was stolen, but the stock being insured, a claim was lodged for rupees 8,000 and was settled for rupees 7,000. So the claim of rupees 8,000 which was lodged by the consignor, so out of 8,000 only rupees 7,000 were admitted by the insurance company. Balance of stock was valued at pro forma invoice price. Write up the consignment and the abnormal loss accounts. So this is the consignment account. So first one is to goods sent on consignment. So let's check. Yes, the costing was 72,000 and it has been sent on pro forma invoice price, which is cost plus profit of 1/6 on invoice price. So 1/6 of this, it is 12,000. This is 12,000. So which is cost plus profit of 1/6 on invoice price. Okay, this is 1/6 on invoice price, not on cost price. This is the cost, 1/6 on invoice price. The consignor paid this much on insurance and other charges. Okay, so now you can see, yes, working notes, invoice price of the goods sent. So cost price of the goods is 72,000. Let the invoice price be X. So this is the equation. We all know that invoice price is equal to cost price plus profit. So here invoice price we have assumed X, cost price is given 72,000 plus profit is 1/6 of invoice price. So invoice price is X, so 1/6 of X. So here X minus 1/6 X is equal to 72,000. So here 6X minus X by 6, because we took the LCM here, so is equal to 72,000. So 5X upon 6 is equal to 72,000 and X is equal to 86,400. So this is the amount of invoice price, 86,400. 2 goods sent on consignment, 86,400. These are the consignor expenses. So consignment account debit to bank, 1800 the consignor has incurred, and this amount of rupees 3,000 has been incurred by the consignee, Prakash. Prakash is the consignee here, and this is the commission on sales. So sales is 72,000. So let's the amount of commission, how much commission? Yes, he was allowed 3% commission on gross sales. So the sales is 72,000. So 3% of this is 2,160. To Prakash commission 2,160. This is the amount of loading on the closing stock. So amount of closing stock is this. So on this loading is this. We will calculate it further. This is the balancing figure, 12,240. So this is the balancing figure, excess of this credit side over the debit side. This is the balancing figure, 12,240. So total is 1,07,400, 1,07,400. So this figure we have to calculate. Prakash, sales, it is given in the question, 72,000. Again check it. 3/4 of the goods were sold at this at 33.33% profit on cost. So 3/4. So 3/4 of this 72,000, it means 54,000. So 54,000 cost of goods were sold at a profit of 33.33%, 1/3. It means 18,000. So 54,000 plus 18,000, 72,000. Yes. By Prakash sales 72,000. By abnormal loss, this we will calculate. This valuation of unsold stock we will calculate. Goods sent on consignment. So the cost of the goods was 72,000 given in the question, and the goods were invoiced at 86,400. So the difference between this 86,400 and 72,000, it is 14,400. So we will calculate this figure and this figure. Yes, this we have calculated. Valuation of closing stock. Invoice price of goods consigned 86,400 we have already calculated. Invoice price of stock left unsold. So 3/4 of the goods was sold. So 1/4 was the left out. So 1/4 is 21,600. And half of the unsold amount lost in the transit. Half of. So half of this is 10,800. So invoice price of stock with consignee after loss 10,800. Add proportionate expenses, non-recurring expenses. Yes, non-recurring expenses, 1,800 spent by the consignor, 3,000 spent by the consignee. So total is 4,800. 4,800. So 1/8 of this, because yes, 3/4 was sold. So only 1/4 was left out, and whatever amount was left out, half of that was stolen or went into abnormal loss. So half of remaining, it means half of 1/4, it means 1/8, it is 600. So value of closing stock is 11,400. So value of closing stock is 11,400. Now the cost of goods lost, abnormal loss. So goods lost is half of the goods unsold. So goods unsold is 1/4. So half of 1/4, it means 1/8 of the goods consigned. So the cost price of the goods consigned was 72,000. So 1/8 of this is 9,000. Proportionate expenses. So proportionate expenses 1/8 of 4,800, because 4,800 were the non-recurring expenses incurred by the consignee and consignor as well, 600. So total is 9,600. So cost of abnormal loss is 9,600. Abnormal loss is 9,600. Now we will see how this amount of 1,800 we have arrived at. Yes, it's very simple. Loading on closing stock. So invoice price of goods unsold is 10,800. We have already calculated, or we can say value of closing stock as per the cost price, as per the invoice price 11,400, and cost of abnormal loss is 9,600. We can easily calculate invoice price of loading on closing stock. Invoice price, so it was 86,400. So 1/8 of 86,400, because 1/4 is the left out. Out of 1/4, half of that, it means 1/8 we are having the amount of closing stock. So 1/8 of 86,400, 10,800, and cost price was 72,000. So 1/8 of this is 9,000. So loading is 1,800. This we have calculated, 1,800. Or we can say that the value of the closing stock was 11,400, and the abnormal cost of abnormal loss of the goods was 9,600. So the difference of 11,400 and 9,600 is again 1,800. So this was all about the valuation of the closing stock when the abnormal loss of goods is there and the non-recurring expenses incurred by the consignor and by the consignee as well. So under such a situation, we have to see that the expenses which have been incurred by the consignor and by the consignee must be taken into account while calculating the amount of unsold stock, that is what we call closing stock. And as far as the abnormal loss is concerned, so in order to determine the amount of abnormal loss, we should also consider the amount of non-recurring expenses incurred by the consignor and by the consignee as well. So in case of consignor, we take the non-recurring expenses for the units consigned by him, but as far as the non-recurring expenses incurred by the consignee, so for that we will take only the goods reached to the consignee after the abnormal loss. So this is how the consignment account is prepared, and after preparing the consignment account, we prepare the consignee account. As we have already seen, consignment account is there. Now this is the consignment account, this is the abnormal loss account. Total amount of abnormal loss is 9,600. So here out of 9,600 it was insured, and the insurance company admitted only 7,000. So the remaining amount will be transferred to the profit and loss account, 2,600, which we will charge from profit and loss account. So this was all about the calculation of closing stock, amount of loading, calculation of normal and abnormal loss, and the impact of abnormal loss on the valuation of unsold stock. So with this, I extend my sincere thanks to my learner for bearing and for enjoying this session. I hope that this concept of consignment account, normal loss, abnormal loss, valuation of closing stock, and the impact of normal and abnormal loss on the valuation of closing stock is now very much clear to my learners. So with this, I again wish my learners a very bright future. Thank you very much.